Hi everyone, and welcome to the OctaFX live trading session. My name is Ambrose Ebuka, and this live trading session, what we'll basically do is analyze pairs and take trades as well. But before I go into full details of this trading session and what we're basically going to be doing, you can go ahead and let me know your name and where you're watching me from in the comments. You can also go ahead to tell me if this is your first time, participating in an OctaFX live trading session. It's the last trading day of the month. It's gonna be a new month tomorrow, right? So you can let me know how the month has been as well, trading wise. And this has been a month with quite a number of economic events and volatility as well. So you can let me know how the markets has been this month as well. And also in the course of this trading session, you can also ask questions in the comments. You can also ask questions in the comments. I'll constantly check the comments to see if you have questions and answer your questions. Let me just quickly talk about some bonuses and offers that you can get when you want to make a deposit. So you have this amazing promo code that you can use to double your deposits. It's going to give you 100% bonus, and the promo code is Ambrose E100. Ambrose E100. It's spelled Ambrose and then E100. So you can apply this promo code by scanning the QR code you see or follow the link in the description, or you can just manually, type in this promo code when you want to make your deposits. There's a section available for you to apply promo codes and get bonuses, but this one is for 100% bonus. So you can take advantage of this and, increase your trading abilities for more profitable trading as well. Okay. Tando is saying hello from Johannesburg. Mansour is from Abuja. Mohammed says he's feeling jiggy. Peter is from Delta Asaba. All right, guys, massive welcome, and thank you for joining this session. We're just going to go straight into the economic events, the news as usual, because we want to understand what has happened and probably economic events that will be released so that we can basically identify the long-term direction of the market and just stay updated with what's going on economically in a country and how it's going to affect the domestic currencies of that country, and also do like a relative comparison to other currencies as well. So this is basically for high impact news alone. If you want to also stay updated with medium impact and low impact, you can just click on these advanced filters and include medium impact and low impact. I personally don't really look at them because I just focus on high impact. As the name goes, it brings about high impact volatility to the market. So the first one is the Australian retail sales month over month, and this Australian retail sales turnover rose 1.9% month over month to, I think that's about 35 billion Australian dollars in January, and this is above the forecast or the expectations of 1.5%. Now, according to the Australian Bureau of Statistics, this turnover increased in all industries, and it was driven mainly by non-food industries. So basically, we're also going to look at the Australian dollar and look at other relative currencies like the Aussie dollar and the Aussie yen as well. And I'm going to show you guys how the Australian dollar has reacted to this news, and some gains that it has gotten in just a few hours of the release of this news as well. It was released in 1:30 a.m. and this is in West African or Nigerian time. You can always change it to your time zone. I think someone said she's tuning in or he's tuning in from Johannesburg, South Africa, so you can always check that as well and change it to your time zone so that you can be updated with the times that this economic events will be released in your country. Okay, we've also had gross domestic products on the Swiss franc and the Canadian dollar as well. And if you are not familiar with gross domestic product or GDP, this is like or the GDP gives a report on the total amount of goods produced within a country's border in a specified period, right? And this product can be used for consumption or for investment as well, or to replace an asset. So it's basically the broadest measure of economic activity, and it's the primary indicator of the economic or the economy's health of a country, right? And we've seen significantly lower figures or lower percentage compared to the forecast on both the Swiss franc and the Canadian dollar. We also had I think it's the US conference board consumer confidence in, let's check Forex Factory. So we had reports on the US conference board consumer confidence, and you can see that this was just released at 4 p.m. Nigerian time, which was just about 2 hours ago. I'm also going to show you guys how the dollar and gold as well has reacted to this release. You can see that the reports showed, lower confidence levels compared to the forecast. It was forecasted at 108.5, but the reports came in lower. And we're basically going to look at gold, the dollar index as well, because it's approaching its yearly high at January. That was 105.62, the yearly high. We're going to look at the impact of this news events and the news events that have been happening, that will be happening. We're just going to see where the dollar is going to go from there, and we're going to use that to analyze other currency pairs as well. So remember, guys, if you have questions or currency pairs that you would like me to analyze, you can type them in the comments. I would constantly check the comments to answer your questions and look at your currency pairs as well. Raphael from Ogun State, massive welcome. Thank you for joining. So obviously we know that before we start our analysis, okay, 1 second. Okay. So you know that before we start our analysis, or before we start to look at possibilities of these various instruments, remember that we have a framework, right? We're being guided by a framework, and it's the framework that basically tells us, areas on our charts where we can please buy orders or where we can please sell orders as well. So I'm just going to write that down and just keep it at one side. Framework. And this is going to be like a guide. So as I analyze, the things that guides the analysis in terms of looking for key levels and areas of values, areas of volatility and liquidity as well. So we have key levels, which are basically support and resistance levels. They can also serve as supply and demand levels as well. We have entry triggers. Going to your entry triggers would consist of, the moving average, which we're also going to use in this analysis, and also candlesticks or candlestick momentum. And it's just like trying to open a trade or create an order in the Forex market. If you're executing a trade, you should have like areas where you want to take out your profit or mitigate the effect of unsuccessful outcome on that trade, right? So you want to have your, I was going to say exact, your exits, which can serve as, which you can identify using swings, and you can use stop loss orders for your exits. Your take profit can also be an exit as well, because you want to identify areas on your chart where you can take your profit. Not sure why it's a bit slow. Okay. Just keep it somewhere here so you guys can always have that in mind. Okay, basically, we're going to look at the dollar index, and last week we considered the possibilities of the dollar index sustaining bullish momentum above 104, and it did that. It went even way past 105, and almost made a retest at the yearly high, which was 105.62, and this is an area where it's touched last year in January, right? It didn't get there, almost did, and now it has pulled back to the downside, right? So I'm not going to say that with this pullback, the bullish run is over for the dollar index, and the reason is because we can see that from from this area, the market has created higher highs and higher lows, higher highs and higher lows, higher highs. And this could be a potential higher low because we're already starting to see rejection, right? Rejection to the downside, and the market is beginning to form some bullish candlesticks, but you can't say for sure because it isn't complete. The candlestick hasn't completely formed yet, right? So pullback is not to say that the upside is done. There's still a possibility that the dollar index could still make a retest at the yearly high, which is 105.6, and that's basically what I'll be looking out for from the dollar index, and I'll use that as a bias to conduct analysis across other major pairs as well. Except the dollar index can trade below 104. If it trades below 104, then that basically means that it will be trading below this moving average as well. I think I should. That basically means that it will be trading below this moving average as well, and then that can change my. Let's change the color of this. Okay, so can you guys confirm if you can hear me? Someone saying the sound is not good. Confirm if you can hear me in the comments. Let me know if you can hear me in the comments. Let me know if you guys can hear me in the comments. Okay, sound is fine. Okay, so I was basically saying that if the dollar index could get down below 104 and trade below it, then just get down below 104 and then start to trade below 104. Then I'll start to look for sell opportunities, because at that point it would now be trading, it will now cross this, it will then cross this moving average and break below all these levels that I have already mapped out and start to trade to the downside. So I'll start to look for selling opportunities on currency pairs or instrument that are paired with dollar, and then I'll start to sell the dollar, right? But until then, I'll just be patient enough to see if the market is trying to create a higher low here, and move to the upside again to create a higher high at that yearly high. Or another thing that I can be patient for is to see if the market can rally to this downside and push back up again. Push back up again. So that's my clear thoughts on the dollar index. And the reason why I love to pay attention to the dollar index is because I can use whatever happens to the dollar to identify or create like strategies or analysis on other major pairs that I trade. So let's quickly look at the pound dollar GBP USD. I don't know, someone's still having issues with this sound. Guys, let me know in the comments if the sound is good now. Okay, so we're going to look at pound dollar, which is the GBP USD. And, from our analysis last week, we considered the opportunities or the possibilities of the pound dollar getting down to at least 1.19. It didn't, I think that was about 10 pips away from, 10 pips away from getting to 1.19, and the market began to pull back to the upside, right? So that was just 10 pips away. Anyway, where does it go from here? So it's currently testing our 200 period moving average, and in previous, if you look at what has happened in previous times where the pound dollar market made retest at the 200 period moving average, what happened? It pushed to the downside, right? It broke out of here but could not sustain that bullish momentum. And what I mean by that is there was no follow-up of this breakout to the upside. It just broke out and took out some stop losses, pulled liquidity, and then came to the downside. If we also, I think we did it in one of our sessions where we drew our FIB, and that was exactly at the 61.8 extension level, So these are some factors that caused this pushback to the downside, and hopefully you guys took advantage of these opportunities, right? And these are two important reasons why you should map out your levels and also take part in these live trading sessions, because when you map out your levels, it gives you like a clear idea, or it helps you see clearly where the market could potentially retest, where the market could potentially get to. And when you stay tuned, or when you continue to participate in these trading sessions, then you can get like first-hand info on what the experts are looking at and use that to refine your own strategies as well, and take trades, look for entries, and make profits. So pound dollar market currently sitting at the 200. I think I'm just going to zoom in for you guys so you can see clearly. So you can see that it has just made a retest at the 200 period moving average, and the bears have taken over. The market has begun to push back to the downside. I can't say for sure if this is going to get back down here. What you can do if you want to take advantage of this opportunity is to wait for this candlestick to close bearish. It has to close bearish, and it has to close below the 200 period moving average, and you have to see a follow-up candlestick with bearish momentum, and then you can hop on your sell trade and put your stop loss just somewhere above, just somewhere above the previous bearish candlestick, and then you can get your targets at the 1.19 level. Right, I'm still bearish on pound dollar, and I can only look for alternate opportunities, and by alternate opportunities I'm talking about bullish or buy opportunities. I can only look for that if we get a sustained break above this 200 period moving average, and obviously when it does that, it's going to rally to the upside, and then we break out of here. So if we do that, then I'll start to look for, if the pound dollar market does that, if the pound dollar market does that, then I'll start to look for buying opportunities in this market, because then this is going to serve as a kind of triple top, or triple bottom rather. And then you get to see like a retest and continuation to the upside. So this is going to serve as a triple top. We're going to see one triple bottom, or I keep saying triple top. This is going to serve as a triple bottom chart pattern, and triple bottom chart patterns are reversal chart patterns, right? So that's what I want to pay attention to. on the pound dollar markets. And if this is a market that you actively trade, I would suggest you just be patient enough for this candlestick to close bearish. Just take out all these drawings. Zoom in a little bit. So you wait for this candlestick to close bearish, and the next one, if it's a follow-up on a bearish candlestick, then you can hop on the trade and, you know, take your sell positions. Remember where you want to put your stop loss, and also remember that you should, you know, use a conservative or a moderate risk to reward ratio. Let's look at euro dollar. And if you look at the pairs that we analyzed last week, they've been doing great. You know, we considered the possibility of the euro dollar, you know, getting back down here, you know, consolidating and breaking to the downside. Our potential targets were 1.05, which is also a psychological level, but it didn't get back down to that point. Just look to the left a little bit. Take this off. Okay, so the euro dollar market couldn't get way down to the 1.05 cycle level, and they began to pull back up from here. Just going to zoom in a little bit so that you guys can see clearly what I'm talking about. So there are still possibilities on the euro dollar market. There are still possibilities of a potential downside. I have a strong feeling about this cycle level, and I still feel that I think the euro dollar market is still going to break down to this 1.05 cycle level. But if you can break above this previous support that has, you know, served so strong for the euro dollar market, it was broken, but if you could break above it, I think I should just indicate it for you guys as well. If the euro dollar market can, you know, dance around here a bit and rally to the upside, and we get a breakout of this previous support level that is now resistance, then I would start to look for buying opportunities, because on the daily time frame, just going to go to the daily time frame and show you guys that we haven't really broken out of the bullish structure yet. So you can see that we haven't really broken out of the bullish structure yet. This can still serve as a higher low, right? And if you notice, it's currently sitting at the 200 period moving average on the daily time frame, right? So there's still a potential buy opportunity on Euro USD, but remember, we need to break out of the 1.066 levels, right? We need to break out of these levels, and then I can decide to start looking for buy opportunities on the euro dollar, right? But I still expect the euro dollar to show me bullish signs from this 1.05 levels, because this is going to serve as the perfect area to look for buy opportunities on the euro dollar market. So that's another thing we can look out for. So remember, guys, on euro dollar, we're not. There's still possibility that we can get here. This is like a good spot to look for buy opportunities for the market to pull back, right? And then you hop on your buy trades. We could see the market. If you want to look for short-term sales, you can look for this, or you can be patient enough for the market to show you bearish momentum at this resistance trend line, which is also going to be in line with the 200 period moving average. And if you can't break above it, then you can take your sales to the downside. And we're going to see the euro dollar markets, you know, get to 1.05 cycle levels. So let's go Australian dollar and the US dollar, Aussie dollar. So remember that earlier today there was a news, you know, a positive news that was being released on the in Australia by the Australian Bureau of Statistics, and if you recall, it was a positive. The reports were positive. Really sure why you guys can't hear me. Okay, the sound is perfect. The sound is great. Okay. So we've seen the Australian dollar, you know, just react to the reports. It's a positive report and has brought about some short-term gains on the Australian dollar. But guess what? It's currently sitting at this zone that we mapped out from our previous live trading session. And this has served as a support in the past, right? And what has it done? Remember that it's important to map out your key levels, because market is going to react to these levels. It's just like the market moved to the upside, and then when it's returning down, it's obviously, there's a high chance that's just going to, you know, react to all these levels that we have mapped out. So that's why it's important to map out these levels. If I zoom in closely again, you'd see that you're already seeing rejections in these levels that we mapped out last week. We're already seeing that the market is beginning to go down to the downside, right? And if we cannot break above this level, the Australian dollar market is going to push down here. So if we can't break above this level and sustain this and sustain the bullish momentum above 0.675, then bears are going to step in, and you know, the market is going to continue to push down to the downside, right? But I expect this to rally up a bit. I think I'm just going to draw that for you guys as well. So I expect this to just rally up a bit, then the drop again to the downside. So if you trade the Aussie dollar market, you want to look out for how it reacts to this area of value, because this is our key level, right? It's a minor one, you know, it's a minor level, but not, at least not compared to major levels like this. But we want to pay attention to how it reacts to this level, because that can be an indication for you to look for either buying opportunities and take targets here, or selling opportunities and take targets here, right? But I just expect it to consolidate a bit and then just break out of the consolidation and get back to the downside. So that's my thoughts on, you know, possible directions on the Australian on the Aussie dollar markets. We are going to look at GBP JPY, which is the pound yen. And you know, we looked at this pair last week and we also considered the possibilities of the pound yen breaking. I think we had some drawings here. It's going to load up in a bit. Okay. So we had these targets mapped out for the pound yen last week, you know, where we looked for targets at 164 cycle level and 165 cycle level. And, you know, we're also expecting a consolidation, you know, minor pullback, which it did, and then it broke out of these levels, right? And remember, I tell you guys that so it's always important to have your key levels mapped out because it just makes the analysis a bit understandable. Well, not a bit, but more understandable compared to when you don't map out these levels. You know, it could be confusing when your levels are not mapped out. But what is going on in the pound yen market right now? So we've broken out of this levels that we mapped out. So we've broken out of this trend line. And if you want to, let me just show you guys where this trend line was drawn. This trend line was drawn on the daily time frame, right? It broke out of it, but remember that breakout on the lower time frame. Just switch back so that you guys can remember what it looks like. This breakout that you see here, you know, these candlesticks and everything out of the daily resistance trend line has just been returned back down into the trend line. So it's now trading below the trend line, right? So all the move that you saw out of that trend line has been returned, and this is a huge rejection candlestick. Like when you see this in the markets in a candlestick, you know that there was a huge rejection within that period, right? So let's see. I'm just zooming again so you guys can see clearly. I think we'll take off some of these drawings. So zoom out a bit. So you can see that the buyers have been rejected. Currently trading below the daily resistance trend line, right? Now, if this closes below, which I think it will, but if it closes below the resistance trend line, then it's safe to say that the bears have taken over, and you can now start to look for bearish opportunities to trade back to the downside, right? And bearish opportunities you want to look out for is a follow-up bearish candlestick. And remember, guys, this is on the daily time frame. So when you want to make your analysis, you can look at the daily time frame. It can give you like an overall idea of what's happening in the market, just like we've seen this rejection, and it's a huge one at that. Right? And usually when these kind of rejections happen, it's just, you know, massive. So your confirmation to go to the downside would be a follow-up candlestick. So we want to see the pound yen market open bearish tomorrow. First, it has to close below the trend line, open bearish, and then we can start to look for bearish opportunities. But if it's able to sustain this bullish momentum and probably close above and start to push back up, then that's where you get to see, or that's where you get to identify buy opportunities and go long on pound yen, right? You can wait for the breakout and the retest at 165, or probably a pullback even way below 165, and then trade to the upside. That's if bullish momentum is sustained above this resistance trend line. But my expectations are, for the pound yen market to temporarily just trade below this trend line. And that's what I'm actually expecting, and that's what I'm going to capitalize on. Okay, I'm just going to check the comments and see if you guys have some currency pairs that you want me to analyze. If you have currency pairs you want me to analyze, you can type them in the comments and I'll check them. Okay. Okay, someone's saying, can I analyze gold? So let's look at gold. NAS 100, just Nasdaq. Okay, USD JPY. Okay, we're going to take it one at a time, actually. Okay, I'm just going to go to the 4-hour time frame on gold. I remember last week we also looked at possibilities of gold, rejecting around the 61.8 Fibonacci extension. I think we drew it from here, and it did that. Currently, even broke below our targets. Our targets were 1820 thereabouts, and it broke below it. This is reacting to the news release that was at 4 p.m. actually, and that's what it's reacted to. And just look at the left hand side on gold. So I'm going to extend this as well, because it has also served as a key level for us in the past. When we did this analysis, this has served as a key level. So I'm just going to extend that to these areas. So if you have buy trades on gold, if you took advantage of that news, you can start to adjust your stop loss and profit. And if you don't have any trades on gold as well, that's fine. What you want to do is to pay attention to how gold reacts to 1835 levels, because that's where it's headed, right? Before it gets here, it has to react to this zone first. So if it gets here and you see the consolidation and a breakout, then you can just trade it to the upside. Your target would be at 1850, which is going to also 1845 to 1850, which is going to also tally with the 200 period moving average, right? But I don't think the bearish move on gold is over yet. I don't think the bearish move on gold is over yet. this reaction could be temporary. We could start to see rejections from this 1835 levels, and then the market still pulls to the downside again, and this is going to serve as a higher low, or a lower high rather, for gold, and then the market pushes to the downside, or still goes up a bit, just tallies to the upside, gets here, breaks above it, and then, you know, goes back down from 1845 to 1850 levels. So it's not really ideal to hop on gold trades right now. What you want to do is just go to the 2-hour time frame as well. So the impulsive move has already been done. We're going to start to see some, you know, consolidations. We're going to see some doji candlesticks form, but it's going to slowly, you know, just find its way up to these levels, and that's when you want to look for your opportunities, right? But if you already have trades, that's fine. You can always trill your stop loss. If you don't and you want to trade gold, you just have to observe what gold does at these levels, because we have this minor key level here that's going to react to. We also have the 200 period moving average that is also going to react to as well. So I hope I answered the question, Raul. I think it's Sharias Raul that asked the question about gold, to analyze gold. But if you have questions on this analysis, you can just let me know in the comments. I'll answer you better if I didn't. Vishal is asking about order block. So there are different ways to trade order blocks, right? And it also depends on the instrument you're trading the order block, right? So if you're trading the instrument and also the time frame as well, just let me give you an example. So in terms of definition, order blocks are, you know, large amounts of currencies that are in Forex, large amounts of currencies that are being traded at one time. But if you want to technically trade order blocks, you have to consider two things: the kind of trader you are and the time frame that you're trading. Well, three things now: your trading style, the time frame, and also the instrument that you be trading the order blocks at. There's some low volatile or low liquid instruments that's just, you know, that makes it a bit difficult for you to find other blocks. Like, so low liquid pairs, this is gold. Gold is a high volatile pair, so it can be easy for you to just find other blocks in the gold markets. And what I mean by the time frame you're trading, if you're a day trader or a scalper, you can look for other blocks on lower time frames, like 5 minutes and 15 minutes max, right? You can look for probably 30 minutes as well. So that's what you want to. Okay, so that's when you want to that's the time frames, or those are the time frames that you want to look for your order blocks and trade your order blocks as well. So I don't know who asked. Okay, Visual asked about order blocks. If you can go ahead to tell me in the comment section what kind of trader you are, and then I can explain further. But if you're a scalper, you know, a day trader, you can look for your order blocks on the lower time frames. It's clearer to spot on the lower time frames for day traders. Mohammed is asking about GBP JPY. I think we looked at GBP JPY. I'll just open it again. So with GBP JPY, remember I told you that it's now trading below the daily resistance trend line. I'm just going to show that again. So this has served as a resistance trend line for the pound yen market since October 2022, right? And what has happened whenever the market got here? Rejected, rejected, and now there was a breakout, but that breakout has been rejected as well. So if you want to trade the pound yen market rather, we want to see the rejection candlestick close below the resistance trend line. Then we want to see a follow-up, the bearish momentum follow-up, and then we can hop on sell trades and take advantage of, you know, the bearish movements of the markets. If the pound yen market is able to sustain above this sustain bullish momentum above this significant resistance trend line, then we can now look for consolidations or pullback, because this is going to serve as an impulsive move. And when the market makes impulsive moves, there's always like I like to call it a relaxing moment where the market just slows down a bit and continues to its initial direction. Okay, the show says it's a day trader, so you want to look for your other blocks on the lower time frame, and it also depends on the currencies you trade and how volatile they are, because other blocks are clearer to, and they mostly form in volatile markets. So you want to look for the opportunities to trade the other blocks on lower time frames, like 5 minutes and 15 minutes as well. Okay, I'm going to take the last question, and this is asking about Nasdaq 100. So let's look at Nasdaq. real quickly. I'll go to the higher time frames first. And this can also be included in your framework, you know, the framework we discussed when we started trading. I think I wrote it somewhere. Okay, I think I took it out. So the framework, you can, in your framework, you can include like a top to bottom analysis pattern where you look at the higher time frames to identify what's going on in the higher time frames, and then scale lower to, or scale down to the lower time frames and execute your trades there. So I think the last in the last live trading session, we identified these levels on Nasdaq, and how, I'm going to point it out again, how this area served as a resistance level for Nasdaq, and the market has begun to pull back down with the retest at this level that we also indicated as a major key level or resistance level for the Nasdaq market. And now it has pulled back down, but it's headed there again. Two things to consider, right? The Nasdaq market is trading, I'm just indicated for you guys. So it's trading within this significant support and significant resistance, and this is what we want to keep an eye on, how it reacts to this resistance level and how it reacts to the support level. Because if there's a rejection at this significant resistance level, then it's headed down to the support level, right? Because if you look here, you can see that this has served as a support level for the Nasdaq market. So we want to pay attention to how it reacts. But if you want to trade the range, then the same thing, you pay attention to how it reacts at the significant level, and then if you see a bearish momentum by candlesticks, then you can go ahead and execute your sell trades and, you know, have your target. I think your most, so this can be your preferred first targets. If you're opening multiple trades, you can now extend your targets to areas like here, right? So you want to see how it reacts to this resistance level, and if there are rejections as well, then you can look for sell opportunities on Nasdaq and then sell it to the downside. This can be your first target, this can be your second target, right? Second thing I wanted you guys to consider is that it's just trading on the line of the 200 period moving average, right? So if you see the 200 period moving average crossed, and it's just trading within it. And when markets trade alongside, you know, just on the 200 period moving average, it can signify a ranging market, right? Which is why you want to observe how it reacts to this resistance level, how it reacts to this support level, and then you can take advantage of, you know, the movements and the momentum that you see. But if you have sell trades, probably sell trades from any area from here, you can start to adjust your stop loss into profit. You can start to adjust your stop loss into profit. Okay, I'm seeing someone ask about 2 times bonus, so I'm just going to review it again. The bonus, or the 2 times bonus, is like 100% bonus where you can apply this promo code Ambrose E100. You can apply the promo code to your deposits. You know, whenever you want to make a deposit, you can scan the QR code or follow the link in the description, or you can just manually input this promo code and you get 100% bonus to your deposits. The promo code is valid until 31st May 2023. Remember, guys, it's the last trading day of the month. Tomorrow is a new month. You always want to apply proper risk management to your trades, and I believe that we've done quite a good analysis this month. We also have another live trading session next week, and we're going to review some currency pairs and commodities as well, and indices like Nasdaq. If you have questions that I haven't seen, you can still go ahead to type those questions in the comments. I'll answer them in the next session. Thank you very much for participating, and I'll see you guys next time.